The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is Myer. So it's flagged 2025 as a year of transition, saying its financial performance year to date has been impacted by a range of market-wide and company-specific factors, specifically a downturn in its apparel brands. At its Investor Strategy Day, Myer said second half sales have risen almost 2%. Comparable sales were up by 1.5% in the period. But it is cautioning that rising costs have impacted performance, citing ongoing ramp-up challenges at its new distribution centre in Victoria. So let's get a view from my expert guests, Luke Winchester from Merewether Capital and Ben Richards from Seneca Financial Solutions. Ben, I'll start with you on Myer. It wasn't just the ramp-up in Victoria where you are joining us from, but it was currency headwinds, rising costs of doing business, pressure on margins. It wasn't a very flavorful Friday update, was it?
Yeah, they've certainly blamed a whole cocktail of headwinds there. But I think broadly the trading update was quite strong from Myer and well received by the market. This is a well-known retailer. It's been around for a while. It, over the last 12 months, has kind of round tripped from 70 cents to $1.20 back to 70 cents, which is about where it is now. I think the trading update today, as you said, Nadine, kind of flagged some strength in the underlying business, the Myer business, with sales cycling positive comparison, so plus 1.9% year over year, comparable sales plus 1.5% year over year. So I think investors have taken some positivity away from that they're now cycling into growth again. However, the apparel was a bit of a weakness. Now that is about a quarter of the size of the Myer core Myer division, and that was a bit weaker, -3 to 4% across all the key metrics. So it's kind of a mixed bag, but I think expectations were somewhat soft heading into this one, and so maybe that explains the bounce we've seen today. So I think it's probably not top of our list in terms of small cap growth names. We're not huge in the small cap retailers at the moment. I just think there's better opportunities elsewhere, but perhaps they get a bit of a tailwind from a falling rates environment, bit of an ease on the consumer wallet and increase in consumer spending. But yeah, valuation of 16 times, and it's pretty modest growth, even if it is positive. So not really one for us. Just think there's better opportunities out there, but not super negative on the stock either.
So would you hold it if you were in it?
Potentially a hold. I'd probably lean towards a sell just to reinvest into other opportunities.
We'll call it a sell. Luke, Myer. Don't think it's really your style of investing either, but could it be a turnaround story when it comes to online sales and its online marketplace? Because if you're not familiar, you can get more on the website than you can in the shops, and that's really, a trend right now.
And I don't think I've set foot in a Myer for a very long time, Nadine. So I think that's a legitimate strategy. Look, it's certainly a turnaround story. I agree with everything Ben just said. You sort of struggle to get enthused. There's a new CEO here. She's got experience in, from Qantas, in particular the frequent flyer program. And I think the excitement from a market point of view was, really leveraging that Myer One program and driving more value from that, which obviously give her time to execute on that. The operational challenges with the new distribution centre, the issues on the consumer, margin pressures. There's been a lot thrown at this business. So I think from an investment point of view, you're playing this as a turnaround. And by and large, when I looked at this one, Nadine, my overarching thought is I think there's a big Solomon Lew halo effect to Myer right now. I mean, obviously, everything he's touched in Aussie retail is pretty much turned to gold. He's vended some brands into Myer. I think he owns more than a quarter of the business now. And so I think there'd be a lot of sort of hope from the market that his effect over the next 2-3 years would really see Myer turn around. I sort of agree with Ben, and originally I was going to say hold, but I actually agree with the ending he came to as well. I just think there's plenty of opportunities. We'll talk about some good ones today, but even in that that larger mid-cap space, there's better businesses that offer more reasonable valuations. 16 times isn't cheap, better growth outlooks, and less exposed to the cyclical consumer, which yes, we've had a rate cut, but it generally takes a while for those things to flow through. So I'll say a sell as well. Not that I'm hugely negative on the business. I just agree with Ben. Better opportunities elsewhere.
Thank you. That's our stock of the day. Myer, solid sell from both of my guests.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.